Good afternoon. Welcome back to the channel. Hope everyone has had a wonderful trading week and a trading session to close this Friday out. A little bit tough day out there for the market bulls as bears come out of the gates swinging and really finishing things off at the lows across the board. SPY down 1.5% today, down 2% on the week. QQQ also down 1.5% on the day, down 2% on the week. The IWM down 2% on the day, down a little over 3% on the week. The Dow down 1.6% on the day and down 1.8% on the week. Semiconductors also closing red, down 2%. Yeah, a little bit of a nasty session to close us out and really to close out a pretty rough week, as you know, we had a day off yesterday to honor Jimmy Carter, but the real excitement definitely came in with much better non-farm payrolls report. As we can see here, when I pull over the economic calendar, we can see that the non-farm payrolls jumped 256,000 here, topping the 164,000 consensus, and a revision of last month's reading to 212,000. The private sector also a big beat, rising 223,000 versus 135,000. And yeah, we also got consumer sentiment and inflation expectations, and the inflation expectations really what, you know, pretty much caught everybody's attention here. The University of Michigan inflation expectations came in at 3.3% versus 2.8% from December. So yeah, this is the highest level since 2008, which is pretty wild, considering everything that we've been through. And you know, this is a survey of consumers with a 5-year inflation outlook. So there you go, 3.3%. That is definitely a thorn there. If you are a market participant who is betting on rate cuts for the year, and the Fed, they have been saying, you know, they had a lot to say yesterday. We had nothing but Fed speakers yesterday, even though it was a holiday. Not a holiday, but, you know, the day off. We had several Fed members come in saying, you know, they are for, you know, taking it easy, letting the data speak on how they need to proceed in a way. So yeah, and that's kind of where we sit. And you know what, the market is just kind of taking the data in stride. And you know, we got this very solid jobs data, and then it's almost like, especially like when you look at the employment data that we've been getting, it's almost as if good news is bad news, and the market didn't really appreciate the better jobs data, which would give the Fed more comfortability to hold interest rates higher for longer so that they can battle inflation, so they can get that down to a 2% target. So yeah, you know, it's a lot to digest, I know. Next week though, it doesn't cool off. You know, this week it was all about the jobs data. Next week it's all about the inflation data. So we got PPI on Tuesday, followed by CPI on Wednesday. Yeah, core retail sales on Thursday here, to throw that in there, and it quiets down for Friday. But you know, it's not going to be an easy week next week, and then not to mention we'll start to get into more earnings season as we get closer and closer to February. So yeah, a lot going on, it seems. But let's just go ahead. Let's take a look at the charts. You know, we got to look at the charts. It was a pretty good trading session. To get things going, we caught the downside move initially, and we made 100% on puts. I did take a lotto that expired worthless, nothing too crazy though. I didn't size heavy. The point was to play it as a lotto, and if we came in to fill this gap here that we've been eyeing at this 581 576 zone, yeah, that would be a nice little play to catch a momentum grab, but we didn't quite get that, but that's okay. Looking at this though, we are now in a mid bear situation here to kind of keep an eye on. We're still in a low compression here on the daily squeeze. And yeah, MACD's turned red against us, and we have a weak downward thrust. So something to pay attention to as we get moving forward into the next week. But really, if we want to take a look at the weekly charts, we could argue, sure, bulls are still in the. I mean, nothing's technically fully broken yet, especially on the weekly chart. We can see that we are still holding the weekly 21 EMA. So for all we know, this could just be a weekly reset. And then we can move forward from there. But I would like to see a weekly squeeze, and we don't have that just yet. In fact, we got some weak thrust here, and we also have a fresh new cross down on the oscillator. So there's some interesting signs there. We are also now in a neutral bull. This was max bull and mid bull past few weeks, but now as we've come back in towards the weekly 21, this of course is going to change just because the momentum is looking a little bit worse, so to speak, in comparison to what it was. So that's what that is telling us. But yeah, as far as the SPY goes, you know what? We're still holding the weekly 21. That's good. But when you look at the daily, it's looking a little bit wonky. We got that daily squeeze, like I said. We actually closed in the middle of this gap. So we're below 581 support, and we got a gap to fill towards 576. Let's go take a look at the Qs. Qs kind of in the same spot here. I'm keeping an eye on this daily squeeze here. We got weak thrust. We've lost the daily 50 now. We're closing below it. We defended it last time we were here a few days ago last week. We defended it here, and now we're closing below it. So yeah, this could get a little interesting. But yeah, on the weekly time frame though, I wouldn't say everything's lost by any means. We're still in a major weekly uptrend, as you can see here. Just solid uptrend back to the weekly 21. Last time we had a pullback, we've held it pretty well. We should probably keep an eye if things do break. We want to see the 50 hold, which is this gold line here. We're going to want to see that hold because that's where we defended last time on the Qs. No weekly squeeze, still in a strong bull, a little bit better than the SPY weekly. But yeah, it's kind of just in the same spot here. Now's not the time really to be sizing heavy, and that's the key thing. There's plenty of really solid setups out there, but when you look at these indices, yeah, it paints a little bit of a different picture. So it's almost like we're fighting against the wind here. The wind is in our face and not behind us and pushing us along. One of those good setups is Google. Google has this really nice, beautiful max bull score, a nice daily squeeze. It has all the right ingredients for this thing to launch higher, but is it going to be able to launch higher if the indices are, trying to tread water and not drown? So that's the main thing. I took, a debit spread here on Meta. It's got that same situation as far as everything goes, that we just talked about Google. It's got a good bullish score. It's got a squeeze. We got a new signal here on the oscillator, low compression squeeze at least. And we're playing the signals here, and we're holding the daily 21. Is this going to be able to continue to rise even if the overall NASDAQ and the S&Ps are trying to drag us down? So, it's a good question to ask and be aware of, and if we look at some of the other things such as the HYG, which is the junk bonds, we can see they've been selling off a little bit of the junk bonds. The LQD, which is your investment grade bonds, which are your higher quality bonds, and yeah, look what they're doing to the high quality bonds. They're selling off. And if we look at the 30-year treasury bonds, we can see that those are selling off as well. So yeah, it's not that great clear of a picture that we've had in the past at this point in time. The IWM lost support at 219, and we are holding on to the daily 200. If we start to lose the daily 200, look out below. I mean, we've defended the daily 200, past few times we came down to it. If we go to the Dow, same kind of situation there. The Dow broke 422 support, and it looks like it is heading down to the daily 200 as well. So, yeah, it's one of those things. Can these big tech names like Meta, Google, Amazon, Apple, can they wake up and hold the market? Semiconductors, what seemed to have been a nice breakout move, especially with NVIDIA. Yeah, look, they gave it all away. Granted, it's still hanging in there. We're not broken by any means. We've gone from a mid compression squeeze to a low compression squeeze, and shoot, we might even start to print some fresh new red dots and just enter into another mid-level compression squeeze. But the key thing for me with the semiconductors is this daily 200 level. So it seems like everybody was looking for this breakout. You kind of got it, but now it looks like there might be some trapped bulls up here, especially with that wick and then the follow through downside move from, what was that, Tuesday. So a lot to kind of digest here as we move forward into the next week. We can compare that with NVIDIA, yeah, had that really nice move and then gave it all away. So that doesn't make me feel too confident that the bulls are in charge. But we'll see. Like I said, we had our weekly close right at the weekly 21 EMA. We could have some longer term buyers look to step in. But honestly, I'm going to be looking to see if we can at first fill this gap at 576 and some change and go from there. And then I'm going to keep an eye on the Dow to see if the Dow continues to move down to the daily 200, which sits at about the 410 level. All right. Yeah, I think that's going to do it. It's not the most great, video that I've made. There's some negative signs out there, but bulls can still turn this around, especially if we get some good inflation data next week. So that's definitely going to be the key thing. Keep an eye on the inflation data, the PPI, CPI, and then we got the retail sales, especially if you are in names such as Walmart and Costco, which Costco had a good report the other day, and Walmart still looks pretty darn juicy, pretty darn bullish, if you ask me. But like I said, there's plenty of good setups. It just depends if the overall wind is going to change direction and get us flowing in a more bullish way than what they have been, because we've seen the S&Ps just kind of and the Qs really just take a little bit of a move to the downside over these past few days and past few weeks, really starting with Papa Powell and the last FOMC minutes. And you could very well put an anchored VWAP here, and that would be a pretty good spot because that's where things kind of seem to have changed directions here. And we were in this nice little range between 602 and 581, and as of today, we kind of broke that 581. So if this were to pan out and we do get continuation, what I like to do is take this measured move here from the top of the range to the bottom of the range, and our target would be all the way down here to about 560, which also might get us to that daily 200 if this measured move pans out. So we'll see. We'll see. All right, guys, that's going to be it for me. Have a wonderful weekend. Stay warm. Even down here in the Augusta, Georgia area, we got some snow, which was pretty fun and pretty wild, but it's cold. Yeah, so stay warm, be good, have a great weekend. I will catch you all on Sunday for Sunday night prep if you're in the Discord, and I'll see you guys later. Bye bye.